Hey guys, thanks for tuning in to another episode of Nuggets News. Today I'm super excited to have legendary resource investor Marin Katusa on the channel. How you going, mate?
Good.
And I've been following your work for a long time now. The Colder War is one of my favorite books, and you're saying that's been out for 5 or 6 years now, which is pretty crazy. So, for those that haven't followed your work, what's your background and how did you get into investing?
By accident, actually. So I started my scholarship in university was for math and chem, and then to take my birdie electives to keep my scholarship up, I took rocks for jocks, which was geology. And unfortunately, in 1998, 99, that was the absolute low of the mining sector. My profs were like, "Look, man, you got math. This is the height of the tech boom. They're dying for mathematicians. So you should really focus on the math and get out of the mining and the geology." So I said, okay. So my first degree was in math. Then I became a high school math teacher, then taught with the Ministry of Education doing the provincial exams, then taught at the college, university doing calculus. And then one of my students' dad actually asked if I could solve a problem. And that's how I got into tungsten in '03. And I did something that I don't recommend people to do. I took a massive line of credit on my house and I became what's known as Mr. Tungsten. So that's how I got to know Doug Casey and all these other kind of, at the time, newsletter writers. I didn't even know what a newsletter writer was. Um, that's where I first started getting published. And from there, did the uranium and just kind of left teaching at that point, and the rest is kind of history.
Yeah, and today we're going to talk about gold, silver, uranium, renewables, and a little bit of crypto as well in the end. So, your life story is pretty interesting, as you were just touching on just then. So, do you want to talk about that a little bit and how that may have changed your outlook on everything?
Yeah, one of my profs in university, he's kind of the leading authority of shale. His name's Dr. Mark Buston. I convinced him to leave teaching and come work for me in 2006. So that's kind of how I ended up being one of the founders of a company called Quadrilla. I was the largest individual investor in it. That became the largest shale gas play in Europe, the Bolan Shales in the UK. So it's kind of interesting with that one is Lord Brown, who used to run BP, and Riverstone essentially took that over from us. So that was like a big win. And then just from there, just getting to know and meet people, doing your due diligence. I started with Jim O'Rourke and Rod Shire, what became Canada's third largest copper producer in 2006. So I've been on the board of that for 12 years and just kind of get out there and do things. And because of Quadrilla and traveling around the world, I kind of created, when you referred back to the book, traveling to over 100 countries, over 500 projects, doing site visits, you kind of get a different perspective of politics, geopolitics, social aspects. Do the locals want some foreigner to come in? And, what's this going to mean? Mining's nothing new, but yet, for every generation it is. And I kind of took a different perspective. That's why I brought guys like Roman Shlenka, Hall of Famer, and Jim O'Rourke and Mark Buston. I like bringing new technology to old places. That's all Quadrilla was, or Copper Mountain. Hell, even when my buddy Miles Thompson, when he was doing Reservoir in Serbia, I was heavily involved in Kosovo and the Balkans at that point. And because of the history in university, you learn about the Trepča complex, and Serbia's got a long history of mining. So most people were freaked out of Serbia. Well, if you're a single guy, you should definitely go to the Balkans. It's a lot of fun, and or single female, of course, nowadays. But anyways, that's where I started funding Miles, and he became a very close friend, and that's why I got heavily involved in Nevsun, which just got bought out. So kind of just traveling, getting out there, and then the speaking circuit. You get to see deal flow, and Vancouver really is the center of the mining finance of the world. Like what Silicon Valley is for the tech sector, that's what Vancouver is for the mining sector.
Yeah, and there's a lot of synergy, I guess, with Australia as well, even though we're on the other side of the world. So let's dive in and talk about gold, and let's do a bit of a bullish case and a bearish case. And is it gold a sort of supply and demand thing that you're most looking at, or do you actually buy into this central bank and that's going to cause inflation? And what are the main drivers of gold for you?
It's all everything. Every commodity is based on supply demand. Now, gold and silver have that premium on the balance sheets of the producers, but it's actually the base metal guys that actually make money. But that's a different question, aspect we'll talk about. Uh, Gold specifically, I don't buy into the GATA concept, the conspiracy theorists and all. That's just not me. I think gold's gonna. It's just what I've been writing for a year and a half. Gold's gonna have a tough sideways to slightly lower price. U.S. dollar is going to be a strong, strong place, but that doesn't mean you can't make money in the sector. Canada and U.S. we're at all-time highs in their domestic. Sorry, the Australians and Canadians in their all-time highs for in their currency. So you got to understand the balance sheets now more than ever, but then also understand that most of the time, even for the Canadians or Australians, the debt is in US dollars. So as the US dollar gets stronger, what percentage of the free cash flow, and people have to remember that management get paid first, then the debt holders, then whatever's left goes to the shareholders. So you really have to understand the balance sheet, the debt aspects, if you're going to succeed in the sector.
Yeah, that's something we talk about a lot on the channel because emerging markets themselves are in this situation with US denominated debt. But you touched on a really important point because there's probably half a dozen Australian gold mining companies that are up 500% since gold peaked. It has been in a bear market. So it's all about finding those hidden gems, isn't it?
For sure. And the Australians, like, look, I met with the management of Newcrest. It's not just that aspect. They're doing some very impressive things where, new technologies and delivering. One thing the Australians do really, really well is they don't do what the North Americans do, where they, up their. So when you have a deposit, what price is it economic? So that's what a reserve is. A resource is you just got a bunch of gold. A reserve is you got a bunch of gold, but what's it economic at? And the Australians have always been more conservative about it. So by being more conservative, they haven't loaded up their gills post GFC, global financial crisis, in debt. So the Australians have been a lot more disciplined than the Canadians and the Americans. Hence why I kind of coined that the Commonwealth takeover. Commonwealth takeover is actually nothing new. It happened in the 90s also. So one thing that you'll find out in commodities or mining, it's very cyclical, right? These trends happen. Yet 5 years ago, it was the opposite. The Canadians were trading at a premium to the Aussies. And that's when I wrote up, I was one of the first guys to write up the potential of Fosterville, which, everybody knows Fosterville now. But when I wrote that up, it was just under $1.50 equivalent of Kirkland Lake today, which is north of $40. But it was a bunch of Canadians that came in and bought it. Today, it's the opposite. You're seeing Newcrest come into BC and buy a big chunk of Imperial's Red Chris. I think this is just the beginning of the Commonwealth takeover.
Yeah, and we'll just touch on silver as well. Do you have any other thoughts on that, or is that just a bit of a,
Silver's kind of, gold's the currency of kings and silver's the currency of gentlemen, but it really is, gold on steroids, both on the up and down. So again, there's careful playing silver. They carry a wild premium, and all these guys talking about, well, we're at all-time lows, the gold silver ratio. I want to remind people, I took a lot of heat about 14 years ago when people used to say, no, gas and oil were a 6-to-1 ratio. I said, technology's changed, fracking's changed the game. And when it went way higher, everyone said, no, it's got to come back to 6-to-1 because that was the energy equivalent ratio. And I said, no, that's not how it works. So a lot of the guys talking about that ratio, it's great to sell newsletters, but it's complete bullshit and it'll blow up your portfolio.
So do you want to dive into that a little bit more? So the people that's saying, it comes out of the ground at this 12-to-1 ratio and all that sort of thing, how has the technology changed it for that ratio to stay out towards 80 or 100?
So if you look at, if you go to any mine, you'll look at, you got your primary product. So take like a copper porphyry, for example. Now your copper is your real bulk of your value. But then you have byproduct and tertiary products. So, your gold and silver, your moly, your molybdenum, all these tertiary streams of cash flow. And a lot of people haven't quite realized that when all these streams came in, like silver wheaton, which is wheaton precious, Franco-Nevada, a lot of these base metals financed themselves by selling off their secondary metals. Well, now they had to increase the recovery rates, and the metallurgy's improved in so many of these mines and so many forms of deposits that they're recovering more secondary and tertiary metal that they normally didn't, say, 50 years or even 25 years ago.
And what's that stat about the percent of silver that's not from primary mines, as you're just sort of touching on? It's pretty high, isn't it?
Oh yeah, it's over 80%, right? So when you look at that, very few mines are primary silver mines. It's kind of like where copper and gold are very different, or uranium. Silver is a byproduct metal. So is moly.
Okay, that's very interesting. That's maybe different to what a lot of people were expecting you to say as well. But let's dive into that technology. So I know drone technology's come a long way and higher resolution imagery. Is that the sort of stuff that you're talking about, or is it more
Well,
chemistry
even
sort of
the,
stuff? Or
well, there. So that's in the crushing circuit at the mill, the metallurgy, the on the chemical side, it's significantly improved. But even like inside the pit in ore sorting, you're getting X-ray technology at the shovel of like in the pit when you're shoveling into. So just minor improvements that are starting in the sector, and then also look at what Newcrest is doing with their caving and technology and all these things. You're getting more out of these deposits where in the past, a lot of this would be stuck in the tailings. It'd be kind of waste material. So from the pit to the mill, improvements in technology are really enhancing it. No different than the energy sector, like what fracking's happened. We're just starting. Like the mining sector is really 20 years behind the energy sector for technology.
yeah, a little bit like agriculture as well, which is something. Have you done much research into agriculture or?
I have, a good friend of mine, Paul Matisik, sold one of the biggest potash deposits up north in Saskatchewan. So about 13 years ago. I spent a lot of time up there. For me, as an investor, as a Canadian, the safe way to play it would be Nutrient, which was the merger of Potash Corp and Agrium. And they were number one and two, and you put it together. The third largest is actually the son, Jacques O'Rourke, with Mosaic Corp. His father, Jim O'Rourke, is a partner of mine. So I know the sector quite well. Right now, I kind of think the equities of Nutrient, which was the merger of Potash Corp and Agrium, are a little bit expensive for me. It's something I follow, but these things have 100-year mine lives. Like there's no shortage of potash or any of that.
Fantastic. I know we've got a lot of people watching that space from Australia as well. So the next thing I want to talk about was the energy sector in general. And we might talk about uranium, and there's a big decision coming from the US there. But then I do want to talk about that. Is the US dollar backed by oil and all those sort of theories as well. So we recently covered uranium. There's lots of bulls out there. Do you want to talk about your bullish case and maybe play devil's advocate as well?
Well, I published a report to kind of, my publication's widely followed, so we have a lot of short guys. So how you guys doing? That will take a thesis and try to short it because we have so many retail people and family offices that follow my stuff. So I said, hey, let's write a short report for uranium. Let's write it as conservative as possible without making it nonsense. So being as conservative as you can use the data to do. And if we can find an investment that makes money in a conservative sector, we're laughing in a base case or a good market. So I wrote this, and the media or the social media and the talking heads, because of my experience in the sector, I'm one of the largest financiers in the uranium space. Been doing it for 16 years, 17 years. I'm one of the few guys that have been to all of the producing assets in North America. Just for example, the world's largest producing uranium companies, Kazatomprom, they quote me in their investor decks. So, to give you an example of my experience in the uranium sector, 2015, they asked me to give the keynote at the World Nuclear Fuels Market, and I kind of said, look, for the utility guys and the miners, you've got to pay attention to what the Kazakhs are doing. Here's a perfect example of what I talked about, the currency advantage. So with the devaluing tenge, like the Kazakh currency, and with the Russian ruble devaluing, they were able to produce economically at $28, $30, whereas an American can't because they're selling in US dollars and they're producing in their local currency, which has been significantly devalued. So that's an advantage. The Kazakhs went from 0 to 60 million pounds and change in less than 15 years. Think about it. So that's the equivalent of OPEC plus Russia in the uranium sector, yet they're using North American technology. So, they were not a serious player in the 70s, 80s, 90s. And the Americans, who were the world's largest producer of uranium up until basically the 80s, went from producing over 40 million pounds a year to producing what, 1.5 million last year. So there's a big paradigm shift. And when I gave the keynote in 2015, I said, look, what you really need to do is sit down and do what I call a quota system. I think it'll be starting out somewhere between 5 to 7 million pounds, because when you actually go and visit all these plants, that's all that can be produced domestically in the US. At the time, I wrote that, how oil, you have the Saudi price, you have the Canadian Henry Hub price, you got the Canadian condensate, you got WTI, you got different pricing for oil. I said that's what will happen with uranium. So there'll be a quota system. I think it'll be gradually phased in as you get more permits in production. But I have all these people talking about, oh, they're going to produce from America. I go, that's complete nonsense. And I know I'm right when I get all this social media hate. And I couldn't believe how much hate I got from the uranium sector and the people in the uranium sector when I'm like, one of the go-to guys in this sector, because I was being conservative and not being a cheerleader. So essentially my conclusion was stick to unhedged, unobligated, permitted U.S. production. Stay away from what I call AK-47 nations, because guess what? None of these management teams have found this uranium. These are all old projects from either Cameco or the oil companies, which were huge in uranium in the 60s and 70s and 80s, or Riva, which is now Orano. They changed their name thinking that will change something. It doesn't. And a lot of these projects are recycled. They go to management teams who are promoters, and they move the stuff, and they basically, all they're doing is mining the shareholders. I've been there, done that to these assets, and if it couldn't work at $120, $130 uranium, why are they going to work at $30 or $40 uranium? So conclusion, stick to, North America. They're going to get a premium in some sort of quota system, but that won't affect moose pasture in, other parts of the world. So it's very select that's going to benefit from the Section 232. And it's already been filed. So Trump's got, 80 days to make his decision. And I see Trump using that as political. It's going to be a political play, but it's nowhere near as big as the trade war with China or the auto sector for Trump. So it'll be interesting how it plays out.
A few Trump tweets could certainly change the sentiment and get a lot of people interested in uranium overnight, I think, as well.
I agree, but I think it's so selective that, it was funny when I kind of made myself a name for myself in the uranium in 2004. You had 15 companies similar to today, and then by 2007 there was something like 700 uranium companies. And basically, trenching and talking about rock samples and all this stuff. It was a wild market. I wouldn't say as wild as the cannabis sector today in Canada, but it was
nuts. Crypto.
Or crypto last year, or the blockchain last year. So I think the wise speculator should stick to, the Athabasca Basin in the U.S.
So let's talk about oil and gas as well. And how do you see that future playing out? A lot of people talk about peak oil. You spoke about that ratio, but technology's improved so much with fracking.
Peak oil is bullshit, and it always has been. Look, again, technology has changed it. Hubbard's concept was based off of conventional production, but he wasn't. It's not his fault. He didn't know about this stuff. So this is the never bet against human ingenuity or emerging markets that develop new areas, right? So if you take gas, it's going to be a tough go. Even all these people are trying to say, well, it's going to be a record winter in heat, and it's going to be a record temperatures, and they're going to need more air conditioning. Well, they're flaring gas in the Bakken. Wait till the Permian opens up more pipelines to take this stuff. So you're going to see, like in my book, I talk about all these different shifts, the geopolitical shifts. Russia's had such an influence with the gas in Europe. But I think over the next decade, just the way oil exports are impacting the US dollar, a lot of people haven't made that connection with the petrodollar. It's kind of like one of the theses of my book. As the Americans export the oil, there's less oil floating in the US in exchange for the oil from the Middle East. It's actually a suction of US dollars that they're selling, right? They sell the oil for US dollars. So it's the opposite of the petrodollar. It's almost the reverse of the petrodollar. And now with natural gas, with LNG, I could see a situation where, what if I was advising Trump, this is what I would say. All right, let's make the Greens happy, and let's give these carbon credits to these companies. Rather than flaring this gas, let's ship it to the LNG. And now the Americans can have influence, because you can now condense the gas from the shale and be competitive with Russian LNG. And now think about what that would do from an American geopolitical situation with the Europeans, right? So it's a game changer.
So you think oil and gas is going to be around for the foreseeable future. So how does that change your picture on renewables? And are we going to get there pretty quickly? I mean, we do see some countries that are already near 100%. Or do you think that is going to take a long time and that oil is just too entwined in our economy?
Well, it takes the time frame. So, for example, our subscribers, myself, I was one of the largest shareholders of a company called Altera, and they got bought out for over $1 billion by Intergex, another large green energy company. So, like anything, if it makes sense economically, it will do well. But it's a growing sector; it's there to stay. Um, and I've had a lot of experience. The largest geothermal plant in America, built in the last 40 years, I financed it in Nevada. And you go to these sectors, there's a lot of room for the green energy. The real play for green energy, as you're talking about, is battery storage, utility scale battery storage. And the technology will come, but it's not going to happen, on the third Thursday of, July 2020. It's going to take a long time, just like all technologies. So, do you play vanadium that way, or, what technology is to play? There's a lot of smart money guys that are playing vanadium to play the utility scale storage.
Yeah.
That's going to be the game changer for green energy.
So you just touched on what you'd say to Trump if you're advising, but what about the Australian government in this sunbathed country? We should have, I think, a lot more investment going into that sort of renewable space, but instead we've still got coal power plants, and we're selling off our energy, and it's just so expensive to live here. So what would you do if you're in charge in Australia?
Um, Australia is a unique situation because it's very similar to Canada. It's such a large landmass with such a small population when you look at landmass versus the population ratio. So you got to look at the infrastructure. So, where and the, for if you take even in the last 10 years, the windmills, how they've changed, you can go down to California or Nevada, and a wind farm, let's say, on average, you had 1.2 to 1.5 megawatts per tower. With the new towers, the economics, you can build a 2.5 megawatt tower. So that's what China's doing. You know how China skipped the whole landline revolution? They went to cell phones and the smartphones right away. I could see a situation for the Australians where it's just too expensive to build the grids for where specific. It'll have to be at source. So in a way, we're actually going back to what the debate between Tesla and Edison, between alt AC and DC, where with the coal big plants and uranium, Tesla's technology worked out. But I think we're actually going to go back to a situation where Edison was proven right, where if you have utility scale storage, you can build and use it in that region. That would be what I would say for the Australians is chill out, let the rest of the world improve. Like look at the decrease in costs for the solar panels. So the Germans took a huge hit because they rushed into and incentivized that. If they waited 10 years, they could have saved 75% of their costs because the panels dropped by 90% in cost. And then the optimization increased also. So I think be patient. The Chinese are investing significantly into the green energy sector. They are doing it in real time because of the air apocalypse. If I was the Aussies, I would permit more mines and sell as much resources to the rest of the world as possible.
Yeah, and it's frustrating when you see them closing down uranium mines and whatnot. But one of the things you just described then was the decentralized energy grid, which a lot of people in the blockchain space are trying out. So are you a big believer in that solar panels on one house could power all four around it, but we need that battery storage, as you just say?
Exactly. You need the utility scale. And then there's the argument of what Bill Gates is doing with nuclear energy. And do not underestimate I think the psychological comeback of green energy, because I think there's a place for a diversified energy matrix. And that's something I talked about in my book. It's funny, I remember the days of Quadrilla with all these protesters and stuff, and yet, all these plastic products they're leaving, and protesters are the messiest people in the world. And their tents and their boots and their rain gear. Where did you get those from, right? It's all from the petroleum industry. So you need a diversified energy matrix. And why did the UAE just complete 3 nuclear reactors? Because they understand you need a diversified energy matrix.
Yeah, so that's something interesting you've just touched on. It. I think the whole world of social media is changing the way that people can influence governments, and we see the yellow vest or Trump get elected, whatever it is, and whether it's, I think QE4 is not going to be politically acceptable if we're talking about money, but I think the people have a big say in what happens in the energy markets as well for the first time.
For sure, and also how it's presented. You remember there was that the wealth tax that Dick Cheney beautifully rephrased as the death tax, and just by how it's positioned and messaged, and that's really how we're in this interesting world where, for example, where I live in Vancouver, BC, Canada, we essentially had a socialist government come in called NDP, and they brought in a carbon tax, and now everyone's upset that it's the highest ever gas prices for your fuel ever in Canada, not just Vancouver or BC, but yet they didn't want to build a pipeline, and the oil companies are essentially going bankrupt because we're at decade low prices for oil. And that's what happens with the stupidity of governments and social media. People don't understand the business. So I expect that trend to continue, the stupidity of governments, and guys like us will optimize that. That's what we do for a living.
Yeah, it's one of the things that if I was ever in charge, I'd look to put experts in their fields, in their respective fields that are making decisions in government. But that's a
Why?
completely different conversation.
But ask yourself that. I've thought about that long and hard when I was younger, but a heart attack takes care of that. Why would you deal with the bullshit of public service when you can just make a lot of money and sit quietly and not deal with the nonsense?
Yeah, I agree. I'd never go into it because you're butting heads against people. You'd never get anything through. But if you were to radicalize the system, put the experts in charge.
You can't fix stupid. Remember that.
Yeah. So let's talk about some of maybe your best trades, your investments, and how they came about, as well as your worst investments, and sort of how you've learnt from both of those.
Oh, well, I've got lots of bad ones in my track record. Anyone in the resource sector says otherwise. You learn all the time. There's always surprises, whether it's metallurgical risk, political risk. The most recent wild one was one that, the Fosterville, which was the new market, that was a massive win. That's on our website. It was actually the first thing I published when I went on my own as Katusa Research. That was a great score, and that was just based off of, because I knew the guys who were buying out Fosterville, which now is one of the most successful gold companies in the last 30 years. The first meeting they ever had was in my office in Vancouver. So being in the right place, knowing the right people, but then jumping on and being able to do the analysis and getting out there and seeing what they're doing. And then we bought 10% of the company, and that was a big win. But there's also the advantage of having time on your hands. So in 2011 was my first time I focused on what, at that time was Pebble, and it had a $28 share price at the time. You had the biggest companies in the world all circling it. Anglo was to spend, $1.5 billion before they earn in 50%. You had Rio Tinto, the world's second largest miner, owned 19%. BHP wanted it. It's the world's largest undeveloped copper deposit. I remember just sitting there with the management going, wow, like 100 million ounces of gold. How can I get to own this one day? Well, in the Christmas of 2015, so about 4.5 years later, it went from $28 to 45 cents. And what changed on the deposit? Nothing. What changed was the social aspects, the social perception, and the political climate of that deposit because of the NGO activity. And I sat there and I had the world's greatest geologist. His name's David Lowell. Anyone listening that, research this guy. They named the Arizona School of Mines after him. He wrote the textbook for copper porphyry, so I've known David for such a gentleman. And I go, David, I've got a great idea. Do you want to come out on site with me? So we jumped in on the plane, and we spent 3 days in technical meetings. And, if you're going to make the biggest bet of your life, you bring the biggest, smartest guys you know. And David Lowell literally is the father of the porphyry deposit model. And he, like Escondida, the world's second largest producing copper mine, he discovered it. He's got something like 12 or 16 discoveries under his belt. And when I basically sat down, I go, what do you think, David? He goes, how much of this can I buy with you? And he invested. I brought in Ross Beatty, Lucas Lundin. And that was one where we, playing the true contrarian, we put $43 million in at 45 cents with a full 5-year warrant at 65 cents. And we listed that warrant. And within, I guess, 12 or 16 months, the share price went to $4.50 and the warrants were trading above $4. So that was a 15 bagger with incredible volume. You're on the front page of Bloomberg 2 days in a row, short attacks. We came and fought. That was an incredible story. And I do believe Pebble will be developed. The chairman's a good friend of mine. You get to know these guys, and that was an incredible win. Quadrilla was a great story, Copper Mountain. But one that I lost a lot of money on was Asanko. Um, it was a producing gold mine that had a short attack on it. And I knew the management team. I knew the directors personally. I did all the due diligence, trusting the model that the team was working with. And essentially, what happened there was there wasn't enough saprolite, the type of this deposit it was, and they overestimated the type of reserve model they had. And I lost something like 65% of my investment on that. And you're going to be wrong sometimes in this business, and you got to know you know what you don't know and when to cut your losses and move on. So that's a pretty good example. In the oil patch, if you get caught when the commodity price moves down, or in Canada right now, we're just the pipeline was built and approved, and a bunch of NGOs using the courts and the socialist government, you get caught in something that truly is like a black swan event. So that's an example where you gotta, don't get caught in illiquid stocks. That's another thing that can really trap you too. So it's a tough game. You got to know what you're doing.
I think illiquidity is all too familiar to cryptocurrency investors. So let's dive into that a little bit, and even just the investing and trading itself. Blockchain is changing. For the first time, someone with $100 can invest in a mine, whereas in Australia the minimum's $500 and it's $20 per trade, and all those things are being erased. So I really like that aspect of it alone. But what is your interest in Bitcoin, cryptocurrency, and blockchain at the moment?
Um, So they're, I guess, Canada's largest. I'm not smart enough to know which coin would play it and this and that, but there is a guy in town that I gave some money to. He created an exchange, so I thought, what the hell, I'll be the pawn shop and just clip fees off it. But what I've seen in that game was, again, like you said, their tradings are so volatile. That's one. But where I think the blockchain is interesting, where I think a lot of people in the mining sector have it wrong, is the diamond sector is where blockchain's truly going to be beneficial, because every single diamond produced, it's kind of, you can think of it as a fingerprint. No one diamond is alike to the other for true natural stones. And there's a company out there that has a real solution to disrupt 100-year-old industry on how it's traded. So I do think there's going to be some massive disruptions in it, but I also think there's going to be incredible amount of losses for people misunderstanding the specific type of disruptions, and that's just like in any sector.
So supply chain, logistics, traceability, all those things are pretty important to a lot of the mining space, I guess.
Yeah, you see, Gold Corp, I had a debate with their team because they thought that would matter, but I said, look, does an individual really care which mine the gold comes from? Because one refinery will have gold concentrate coming from 40 different mines. As long as it's morally mined, no one really cares. But with the diamonds, you can truly, from the mine, put it through a blockchain and disrupt the sales process. Because with the site holdings, there's only about 100 De Beers site holders, and they kind of have a little monopoly, but there's 10,000 manufacturers that it kind of sprinkles and trades down. And think about all the middlemen. So there's a true disruption. I don't see blockchain disrupting the gold sector or the silver sector, but I do see it disrupting the way diamonds are sold and moved on within the chain.
Yeah, I know for a fact that there's a lot of big oil and gas companies in Australia looking at it, and it does make me wonder what application they're looking at. As you say, I don't know why it's that important to trace the oil and gas per se, but
I don't think the one reason why they would want to do that is, say, for uranium. If you're Donald Trump, is that uranium coming from Canada, or is the mining company have a mine, say, in Kazakhstan, and it's trying to bypass sanctions and say it's like a NAFTA mined uranium, but it's not.
Yeah.
That's one reason I think you could bring it in for specific type of commodities to prevent, you know, financially savvy or logistically savvy mining companies or energy companies to prevent the sanction kind of thing. But I agree with you. Like, you know, from a general standpoint, you know, whether the LNG gas comes from one side of the country or the other, it really makes no difference.
So I just want to rewind back to diamonds because I think stamping out fake diamonds is also really important. But we've got, I'm not sure what you call it, grown diamonds these days that are almost to the same quality as real diamonds. So do you see that playing out with a premium or?
You know, the interesting thing that no one's talking about, the synthetics, you know, like the manufactured diamonds, is the electricity footprint, the massive carbon footprint that the synthetics are hiding behind. They're trying to say that they're green. They're anywhere between 5 to 25 times more carbon intensive footprint than a naturally mined diamond. So, for example, where are these being manufactured? Not in Silicon Valley or LA where they're selling them. It's actually in the dirtiest parts of coal generated electricity in China. So, this is something the Chinese now are stamping on. So, synthetics, you really have to understand is, you know, you're essentially taking coal and you're compounding the electrical intensity. It's just the cost of power. And it has made a significant impact in what I call the sub 2 carat market. Once you get above 2.25 carats, the electricity cost, it's not linear because volume, it's going to go, you're talking about cubes here now, not linear. And the electricity intensity to go from 2 carats to say 5 or 6 carats is massive. It's not just 3 times more power. You're talking about on a cube level. So that power, it's just not economic to do, and the carbon footprint. And I think that's the number one most deceptive market is they're trying to market it as green. Well, I can assure you that not a single one is powered by green power because where these factories are in China and in India, and they're not using green power because they can't. It's utilities. There's no utility scale storage to do that because think of it as like a microwave that has to work for months to just pound that carbon into diamonds because that's all diamond is, carbon. Now, where you really want to focus on for where the synthetics can touch is what I call the fancies, the plus 10 carat market, because you just can't build those types of carats. So De Beers saw that, you know, these diamonds, the synthetics, were being marketed as real natural stones, and they were tricking the buyer from that, and two, their cost for this, De Beers is going to go, okay, we're going to announce this and it's going to be $800 a carat, whereas the synthetics are trading as, you know, 5,000-6,000 a carat, and it's going to be kind of like a accessory jewelry. I do think it's going to change the whole diamond sector for the smaller carats. But like anything, you want to focus for diamonds is the luxury market, and the price of the big stones have actually been increasing. So that's an interesting whole other story.
Yeah, and you touched on the emissions from that, and I think Bitcoin mining is in a similar vein of thought. But have you done much reading about this? And Bitcoin is one of the fastest growing and most renewable industries, and I think it could be the first industry or country that really gets to 100% renewable. Even though it does consume a lot of energy, it's actually going to be very green.
I think the Russians should be the ones that could tap into that nuclear power and then it's completely green, right? So that's always something I thought would happen. Or if you went out, I was a shareholder in HS Orca, which is in Iceland. You know, Iceland is so big and there's so much geothermal potential. You could just bring in those, you know, the bit mains into a massive, let's say 40-foot trailer. You could tap them at the site, so you don't need the, you know, high voltage wires to take the power from the geothermal plant. You could sit there, and then you could turn the heat outside to heat up a cafe or something. And, you know, that's what Blue Lagoon is, one of the world's most precious spas where the Kardashians made famous. You know what that really is? It's the geothermal's tailings pond. That's what it is.
Yeah, it does remind me of China. You see these sheds that are just, you know, they're waterproof enough and they're sitting at the bottom of these hydro dams and they're just mining Bitcoin. It's just crazy. Any other thoughts on gaming? This is something you've written about a little bit recently, and it is something that I think blockchain is going to be really applicable for in-game items, having these sort of multiverses where characters and games and all that can be interchangeable for the first time. So, what are your thoughts on the gaming industry?
I'm not a gamer, but how I got into it is one of my former calculus students who's been working with me for about 14, 15 years. He, uh, he's a full out addicted gamer. Mike Chang is this brilliant mind, but the guy must be gaming 5, 6 hours a day. And that's when I got the idea. And him and his buddies all came to our office one day and they're talking about the gaming. I'm like, guys, let's figure out a way to make money off of this. And they got all into it. And when I understood the concept of microtransactions, that really resonated with me, and the economics of tapping into that. It really is an incredible business plan, and making it so mobile and easy, it's only going to grow. And when you start getting royalty reward points into the sector and all these different aspects to it, it really is an incredible business.
I, th-
Truly, truly incredible.
I think you're probably one of the people that can understand and be a bit more open minded to this digital scarcity. It's really hard for the older generation to grasp that people are paying a lot of money for land in a digital environment or digital items. And you say 6 hours a day is addictive, but I know people that are playing 12, 18 hours a day and they're spending tens of thousands of dollars of items. And this was a real eye opener for me. I think this is just going to be way bigger than anyone is sort of giving it credit
It's
for.
just starting. I've got a bunch of friends, and I know the owner of our professional sports team here, the Vancouver Canucks, and he's put up tens of millions of dollars for the esports league, and he's taking it public. The demand for it was multiple times oversold. So I the boomers are starting to recognize it because their grandkids are into their iPhones so much. And I think it's just starting where when a guy in town rips around in a Lamborghini and they see people making millions off of this stuff, even the boomers will catch in that, hey, this is something that we should pay attention to.
Yeah, and final thing I wanted to talk about was your thoughts on the future. So do you think we're all going to be, driving Teslas, or is everyone going to go into that sort of space, and is everyone going to power their own home? If we get a little bit futuristic, what are some themes that you see playing out?
What I think is going to happen is, on the automobile side, um, I think you'll within 25 years we'll have true self-driving cars, and I think the car will be designed differently. So the whole concept of having a parking lot in your office, well, I come into the office at 6 o'clock in the morning and I leave at 5 at night. My car sits there for 11 hours. um, would I mind if my car went and picked up other people who were members of, let's say, the club or the dealership where I'm the owner, but it could run errands and pick up other people. And then before it comes and picks me, rather than going to a gas station and fill up, it gets cleaned up in case I don't like there's spills or odors or whatever. I think that's one thing that we'll definitely see. So there's going to be fewer cars bought and sold. And you think about it, how many hours a day? My wife has a car, I have a car, and really at nighttime, it's going to change the whole complexity. Does it need to sit in my car? That's one thing I definitely see changing. Um, I think the components, the minerals from the mining side, when you look at utility scale storage, I think a lot of people don't understand that America is the Saudi Arabia of vanadium. And with metallurgical breakthroughs that didn't exist 25 years ago, and vanadium was used for the absolute rawest form of rebar, for foundations. We're talking about the cheapest form of metal, and no one really paid attention to vanadium. It was a byproduct from most of the mines. For example, uranium has a lot of vanadium with it, so you'd have it as a byproduct. But if you just take the Chinese to bring their rebar to the quality of North America, which you think a guy would want to buy a house with the same North American standards, he doesn't want his rebar and concrete breaking out on him. The Chinese will catch up to that standard. There's just not enough secondary supply just to meet the rebar. Then you go, wait a second. If I do believe in human innovation, which I do, and I do believe that utility scale storage for green energy will happen, could there be something else that replaces the vanadium? Could be, but right now it's been scientifically known that vanadium is the kind of contender for it right now. And it's readily available in America. It's the Saudi Arabia of it, and the metallurgy's there to make it work. So, you can make money at $10 uranium mining it in Nevada. That's probably going to be a good place to be. So you're seeing minerals and deposits that weren't really paid attention to 10 years ago. For example, palladium was always known as the poor man's precious metal, right? Because it was always a replacement to platinum, right? And when I got married, I got my ring made in platinum because, the jeweler convinced me, blah, blah, whatever, right? Really, the wife picks all that stuff. But, and you look at it, and how many people made their rings out of palladium? Because it was cheaper than platinum. People want the better, right? You want the, a rock band. It didn't go, silver, gold, palladium. It went silver, gold, platinum, right? Because it was the most expensive precious metal. Well, what happened? Well, with the hybrid cars, and because of what happened in China, platinum doesn't quite work as efficiently at the higher intensities as palladium, and nobody really saw that. And now palladium is much more expensive than gold and platinum. And yet it was this kind of thing that 5 years ago people laughed at, right? So that's another example of, just because of the hybrid cars and the mandates from the government of China. And you better believe when the government of China mandates something, it's going to follow it. And I think to kind of conclude, the biggest thing I see in the next 25 years is the social credit score. I think that is going to be something that will imagine the Soviet system with today's technology with the social credit score. I ask a lot of people, what would have happened there?
It's
Right?
pretty scary. I mean,
it all? I don't think so.
In Australia, they're banning encryption, which is just insane. And then they've actually launched a social credit trial in the Northern Territory, and they're talking about doing it in Sydney because it's in China, and we sort of joke about it, but it's coming to Australia. In terms of self-driving cars, I think that all has to be on a blockchain or some sort of secure database because we've already seen self-driving cars be hacked and crashed into walls and that sort of thing. So, any thoughts on that? Just finally.
I agree with what you're saying. So I think it's going to be an exciting time. People are hesitant on technologies, but one thing, who I feel worst for is, and I understand the whole short against Tesla, and I understand that he's a kook when he talks on Twitter, but go and drive a Tesla. It's a pretty cool car, and I can only imagine the next 5 to 10 years when the other manufacturers catch up to where Tesla, he really is a maverick in what he's doing, but that personality was required to bring it to where it was. And I think, whether it's overvalued or not, I don't care. I don't buy the stock, but I look at it and going, it's actually great because GM and Ford, would you want to drive a Nissan Leaf or a Ford, whatever? Like, they were ugly, they were slow, they were uncomfortable. At least the Tesla took it to a new place. And now all of the other cars, like you look at a Rimac out of Croatia and you go check out that car. That is a sexy car. It's bringing back that 50s and early 60s, the sexiness of the muscle cars in an electrical way. I think it's just going to be exciting. And, the medical revolutions that are going to happen. Hey, I'm living proof of it. So I just think it's fascinating. I'm excited.
Fantastic. Let's finish up with that story. We talked about it in the pre-interview, but was that life-changing experience when you had a quadruple bypass at such a young age?
Yes. I was 33 years old. I was working long hours. I lived on the road for the last 12 years before that. And, I just was getting some serious chest pains. And I go to my wife, I said, I think I'm going to have a heart attack. And, you're 33, you're thinking, oh God, is it I was just literally flew from Mexico at a good friend's wedding to New York to give a keynote at an investment conference, went to Reuters in Times Square to give an interview. And that night, I just remember telling my wife, I go, I think I'm having a heart attack. So I popped a bunch of baby aspirins, and I thought, do I go to a hospital in New York and deal with not knowing where to go, or do I catch the first flight out and go to where I know the doctors? So I said, okay, I'm 33. Am I really having a heart attack? Makes no sense. Let's be conservative, and I'm going to catch the first flight out. And Get to the emergency room the next morning, right off the flight from the airport to the emergency. I go and I tell them, I'm having chest pains. I think I'm having a heart attack. They look at me and they laughed and they said, you know, okay, it's in your head. I go, I'd like to see a cardiologist. The doctor comes and goes, look, I think you're having a panic attack. Here's some anxiety pills. And, it's kind of funny. One of the doctors looks at me and he goes, you know, go home, take these pills, get your wife to make a bowl of pasta. I go, pasta? Why the hell would I want to eat a bowl of pasta? And he goes, well, you Italians like pasta. I go, that is so racist. And I go, I'm not even Italian. Okay. So, and I go, can I please see a cardiologist? And I waited 40 hours before I saw a cardiologist. So the moral of the story is when you believe in something and your body is telling you something, listen, don't listen to someone else. And if you're not getting the answers from the people you're seeing, don't accept it. Go to someone else. And I requested the angiogram. Just to give you an example, they were like, told my wife, your husband, this is all in his head, go home. And when they finally realized I wasn't going to go home, I wanted my angiogram, 40 hours in emergency, and the beauty of the Canadian medical system. And the angiogram said I needed a triple bypass. And they said, okay, when you wake up, you're going to have a big scar on your left leg. I wake up and I'm going, wow, these drugs are really good. I don't feel anything on my legs. And even though I was drugged up, I thought, what the hell? And I went to scratch my head and I went, oh my God, my arm. And they took an artery out of my left arm. And I go, oh my God, it was like that Simpsons episode. The doctor takes the leg for an arm and an arm for a leg. And I'm going, did they fuck this up too? And that's when the surgeon came in and said, hey man, when we opened you up, we realized that the angiogram was wrong. And we really want to take this advance. And you had a quadruple bypass. So, and he goes, I had my surgery Saturday morning. He goes, with the amount of blockages you had, I don't think you'd be alive by Monday. That's 2 days later. And he goes, good thing you're stubborn. And it's not about being stubborn. It's about believing in something and following through. And that's kind of the moral of the story. Regardless of whether you listen to my success in the business or not, the last thing you should always take is, if you truly believe in something, stick to your guns, because other people may not feel or know what you know. So that's kind of my lesson.
Yeah, and as a pharmacist that left the industry, I can tell you right now that people are very book smart and there's very few common sense out there in practicing. But Marin, you've got a range of awesome resources, both free and premium. So I'll put the links in the description below, but do you want to describe those for people?
Yeah, so I publish a weekly concept, and I published a lot on the debt in the mining sector, the Commonwealth takeover, the social credit score. That publishes every Friday. It's free. And then if you like my style or you like the track record and you want to know where I'm putting my money, we do a lot of private placements. And for example, we did one on a royalty company that's up over 50%. And I'm the lead order in every financing. I don't take any fees in any form from any of these companies. You can't buy your way onto my website. You can't sponsor your way. There's none of that. If I want to write a check, my subscribers have the option, if they choose to. They don't have to, but they have all the information on what I'm doing, and they get in at the same time at the same price. And then when I tell people to sell, they get 3 business days to sell before I start selling. So we've done this, for example, on Sun Metals, which, just in February, I wrote it up in December, and it's been a triple for us. Now it's the most exciting story in BC, rightfully so, for what Mark O'Day and his team has done. So that's kind of my style into the sector. It's solely resource focused. If you want to talk about, other sectors, that's not my cup of tea. I'm focused on the resource sector, and it's massive skin in the game. I don't believe in this whole concept of newsletter writers or fund managers that have no skin in the game and they just make money off of other people's money. I do not understand why people follow someone that has no skin in the game, because I can assure you, when you have millions of dollars of your own money, you're that much more interested to go to site and stay on top of management. And it's a way to get into my office and see what we're doing. Plus the conferences, I think, so we had a partnership called Cambridge House. The VRIC is the largest investment conference for resources in the world. It's free, with a link through Katusa Research, you get in free. And I bring in the who's who of the crowd. Like I brought in Newmarket when it was $1.50, and went to $40. Africa Oil, when it was $1, went to $12. Northern Dynasty at 45 cents to 10 bagger. You get to meet all the management teams, and I bring in the all-star players in the industry, whether it's Lucas Lundin, Ross Beatty, and the majors, whether it's Ian Telford, former chairman of the Gold Corp, which now merged with Newmont. You just bring them in, and the resource sector is kind of like what you're talking about with the crypto space. It's not as volatile or illiquid as the crypto space, but you can have the type of swings where in 2 or 3 years you can literally make 10, 15 times your money, and I'm living proof of that.
Yeah, and you've got to be able to stomach the ups and the ups and the
Oh, yeah,
downs. But I really love all the stuff you do, Marin. Thanks so much for joining us today. And if you're over in Australia or I'm in Canada, we'll have to catch up.
definitely. All the best, man.
Thanks, guys. Cheers.